Hey, what's up, everybody? Welcome back to the Passive Money Plan. Today is going to be the first day we start doing live streaming, so this will be interesting. Of course, for everybody that's looking out, we'll be live streaming at 12 p.m. on Saturdays. Hopefully, we get to answer a lot of your questions. Hopefully, providing information that would help and assist you in your day-to-day journey with your financial freedom. The motto that we always go by is the one by Eric Thomas: when you want to succeed as bad as you want to breathe, that's when you'll be successful. Not until, not before. You want to succeed as bad as you want to breathe, as if somebody's trying to drown you. Just think of what that feels like if somebody's trying to drown you and how bad you want to breathe. That's how bad you want to be successful. And you won't reach that success until you're willing to do whatever it takes to be successful. And when we say whatever it takes, we don't mean doing something nefarious like something illegal or anything like that, but being 100% all in that success and success of your family is your number one goal. But with that being said, Alex, Berkshire Hathaway just came out today. Today is Saturday, February 22nd. Berkshire Hathaway just came out with their earnings report. Of course, another monster earning report. But some things that I wanted to point out, and I just want to get your insight on what you thought about them. One thing that came out is Berkshire Hathaway is sitting on $334 billion worth of cash that's just not invested, maybe sitting in T-bills, getting a little interest rate. So what do you think Warren Buffett is trying to say with sitting on that amount of cash?
Yeah, or Berkshire Hathaway has been, I think, increasing their cash pile for some time now. Um, I think it makes a big statement that they're looking perhaps for a downturn in the market, or they're just looking for better purchase prices on company stocks.
I can see that. I believe that there's he's looking at it as no opportunity. The world that he knew when it came to investing and how fast it's moving is different from back in the day till it is now. Information is abundant. I mean, Warren Buffett still most likely gets the information maybe like back in the day, let's say in the 60s, 70s, 80s, hell, even 90s, early 2000s. Warren Buffett would have the information months before anybody else would have the information because just of his due diligence and things like that. But now today, Warren Buffett probably got maybe a week, 2 week head start on everybody else. And then so it shrinks up his time frame to build a huge position before it's found out that hey, Warren Buffett's moving into this situation.
Yeah.
So I think that's a part of it. So he's not seeing anything that's staying undervalued that he likes that he can build a huge position in before it's found out. Also, that's one reason why I think he's just sitting on the sidelines. And then the attractiveness of it, the attractiveness of stocks today. I mean, stocks is trading at a insane multiples. I mean, what's the darling right now? Palantir. Palantir is the darling of the stock market right now. And Palantir is trading at 40 plus XPE. Warren Buffett is a value investor. 40 plus PE is not value to him. He's looking at something that's in the price to earning multiples that's, sub 18. Historically, that's what he's looked for. So those are different avenues and stuff that he's not seeing those opportunities out there. And then, of course, with the printing of money by the Fed, that it's those opportunities are not out there because now PE multiples have stretched. You've seen he's still building a position in Occidental Petroleum because that one right there seems very undervalued. But another question I got for you right now, I'm just turning to it now because I haven't looked at it. All right, so Berkshire Hathaway Class A, not Class B. Class A shares are trading at about $719,000 per share. In your view, what do you think? Do you think the stock is fairly valued, overvalued, or undervalued?
Honestly, I would have to look more into Berkshire Hathaway's like financials. I mean, the stock price, like the of $719,000, it's because of the low share float. I think there's only what, like 1.5 million of those shares. Is that correct?
Yes.
Yeah, so I
Yep.
mean that's really the reason why the price on that share is so high. But if you look at say what the company earns, and I think they've outperformed the S&P 500. But if just look at the acquisitions that Berkshire Hathaway is acquiring. They've acquired recently, like Pilot Flying J, and then they have some previous acquisitions as well of like Dairy Queen, Geico. If you look at all the companies that they hold, and it was interesting if I can find the screenshot of it because it shows all the companies that Berkshire Hathaway owns. And it's almost like you're buying an index in itself when you buy that company. So it's very well diversified amongst different sectors and different companies that do different things because of their ownership in those companies. So, but I think that looking at it from a maybe ETF standpoint, even though it's not an ETF, comparing it to something like the S&P 500 or comparing it to something like the Nasdaq, is it overvalued? Because we know that if the company keeps growing and keeps acquiring and there's more assets under its portfolio, that will only increase its value in the long term. So maybe now, if it could be considered, and again, I'd have to look at the financials, but I think as a long-term buy, I think it's good to buy now. I think that it will be more valuable in the future than it sits right now.
Interesting take on that. For me, I think, and people gonna laugh at it because they see the sticker price of, $719,000 a share. I believe that Berkshire Hathaway is the most undervalued stock on the stock market by a large margin. By a large margin. So understand, they're sitting with about $338 billion in cash. They're sitting at more, almost more cash than Apple is. Berkshire Hathaway is Apple's number one shareholder. Apple is trading at what, about two and a half, $3 trillion.
Hmm. And Berkshire's right
Berkshire
at
Hathaway is,
trillion, I think.
yeah, yeah. Berkshire Hathaway is trading at a trillion. Berkshire Hathaway PE is only a nine. It's only a nine.
Well,
Everybody else got all these bloated PEs and things like that. People in the 20s, 40s, 80s, 60s. Hell, some is even like 200 PE. Like a stock like OKLO, it has zero revenue, but has increased 300% in the last 2 months with no revenue. Forget profits, forget sales, forget PE multiple, forget debt to equity. They have zero sales, zero revenue, and it's moving up at that pace. So Berkshire Hathaway itself is trading at a huge discount. They really have no peers, like you said. You have the index there, but they really have no peers. But the reason why I think, besides just the numbers, the matrix, that it's hugely undervalued is Berkshire Hathaway. First thing, they invest in America. That's a good slogan to use, Warren Buffett. I salute you on that for even using that slogan. But Berkshire Hathaway, just look at their portfolio. Alex, pull it up. Well, we're gonna call off some names while we're here.
hmm.
All right. Berkshire Hathaway does more than just invest in America. They invest in the addiction of America. See, that's the thing that people don't realize. Candy, chocolate, it's an addiction. iPhones, cell phones, addiction. Just as a country, railways is an addiction. Oil is an addiction. We need oil for damn near everything that we have in America. So it's an addiction. Just look at their portfolio. Alice, just rattle off a couple of names of what Berkshire Hathaway owns outright, and then what they have big stock positions in, and then we'll talk about and then I'll talk about the addictions. Why you said just rattle a couple of
Hmm.
them.
All right, so some names that people may recognize that Berkshire Hathaway owns outright. Geico, Dairy Queen,
Concern, yeah, addiction.
Dairy Queen, Fruit of the Loom, that's like
Mm-hmm.
clothing. We
Mm-hmm.
got Clayton Homes, I've heard of them.
Mm-hmm.
Coca-Cola. They don't own Coca-Cola outright, but they are a large shareholder in them.
Yep, they're the largest.
Um, as you mentioned, Occidental Petroleum. Some of the other companies they have shareholdings in, you already mentioned Apple. They do also own, say, like Bank of America. Um, they invest in Chevron. And these are reputable names, you know. These are companies that people can identify, that they know of. It's not like they own some off the wall Korean, you know, tire company or something.
Right. And then now let's just break down that. So they are the biggest shareholders in all the financials, the American Express, the Bank of America, the JP Morgan and things and what have you. The United States as an economy runs off debt. Most people, let's say 99% of the people in America don't pay cash for anything. So we're addicted to getting debt and making that monthly payment. Warren Buffett wants in on that. You know, the Fruit of the Loom purchase, that was a great purchase early on. That grandma used to always say, make sure you never get in an accident and you got dirty underwear on. That's what I always remember when I think of Fruit of the Loom. And so underwear, that's a thing that people wear every day. Uh, then you go to the oil sector. The oil sector, we already talked about it. That's something that America as an economy addicted to. Cars, plastics, phones, electronics, everything petroleum is in. You know, insurance. I mean, it's you need insurance by law in most states to drive a vehicle. You need insurance by law, well, by uh, financial standards to own a house you paying a mortgage on. You have to have insurance. So he's just getting into the things that produces high cash flow that America is addicted to. America as an economy is addicted to. And that's why I think it's very undervalued because the addiction is not going to change no time soon. It's only demand for the addiction is just going to go higher. Even if you start getting to the sweets like candies, chocolates, and CC's or whatever he owns, those are hallmark names, Mars and things like that. Those are hallmark names that's in the fabric of America that just people are addicted to that they'll just keep paying for, keep paying for, keep on paying for, and it derives and passes off a big cash cohort. If you look at every stock that Warren Buffett owns, well, Berkshire Hathaway owns, it also produces a dividend, which is what a lot of cash is being dripped off to him. Big cash flow positions, big cash flow positions. So that's the reason why I think it's highly undervalued because the addiction is only going to go more. The more money people have in their pocket, the more the addiction is going to go. The more that they're going to borrow, the more they're going to get a bigger house, the more they're going to get more cars that they got to get more insurance for. You know, then we can go to Kirby's vacuum. Everybody know what Kirby vacuum is. Hell, my family they had like 16 of those damn things. The most expensive vacuum ever that can do everything. It's like a damn transformer, but people just vacuum the floors with it. But they'll pay it because it's a vacuum. I mean, it's Kirby vacuum. It's a status symbol. So he's played into the addiction of America, and then that's why I believe it's undervalued, especially trading at a 9 PE. Especially trading at a 9 PE, and addiction is only going to get stronger. More capital is only going to come in, and that's the reason why I believe this company is super, super undervalued. And then for the people that's looking at the sticker price at the Class A shares, you can always buy the Class B shares, which is BRK-B. And I believe those are trading at, let me see. Those are trading at $477 a share. But still, it's just the Class B version of the stock that we were just talking about. And it's also trading at a 9.67 PE. Debt to equity is only 19%. Revenue per year. Not the cash that they have sitting on the sideline. Revenue per year is $396 billion a year. And that's trailing. That's not forward. That's where the money is. And I believe Berkshire Hathaway, with Warren Buffett there or not there, the way they have that company set up will be the biggest player for a long time. And it's like I said, it's still majorly undervalued. I say it's undervalued by 50%. At today's what they're doing today is undervalued by 50%.
Okay, so you say that they could undervalue by 50%, meaning they could double, or they're worth
Yes.
twice as much as what they're trading at.
Yes. 100%. They're worth double what they're trading at. And then let's if we look at the sum of the parts, the sum of the parts itself. This if you derive, so let's just say uh Apple, I don't know what percentage of Apple Berkshire Hathaway own, but let's just say they own 20%. 20% of 3 trillion is what?
600 billion.
That's just one company.
Yeah.
They own 10% of Bank of America.
Yeah.
Yeah. So if you start adding the sum of the parts of what they own, is way more than that $1 trillion market cap that they actually trade in.
Yeah,
It's
that's
it's
true.
about well, if you the sum of the parts. I mean, Burlington Northern, the railroad company, that's about half a trillion itself. Then you got Geico Insurance. All these companies are not even publicly traded, and they just print money. So if you just look at the sum of the parts, it should be valued higher than Apple. That's that's where I get the undervalue from.
Yeah, that's true. So you don't own them in your portfolio though, do you? I've never heard you talk about owning Berkshire.
That's an interesting question. I'm glad I'm glad you actually brought it up. Actually, in my retirement accounts, the mutual funds that I own in my retirement accounts, I always check to make sure it's a high concentration in Berkshire Class A or Class B shares. And then those are the ones that I always have, and I just keep investing, keep investing, keep investing. Because usually, I mean, because I know most people are scared of the sticker shock, so pushing that stock up will be hard. So that's why I just haven't just went outright and just said Berkshire, Berkshire, Berkshire. But every every mutual fund that I have, and I only have a few, but they have a high concentration in Berkshire shares, and then that's how I invest in Berkshire.
And so, like, do you not directly invest in them now because you think that with what you can, I don't want to say what, with what you can find, but doing the due diligence of doing the homework and taking the time to find, like, say these, I'll just call them startup companies that are worth only a couple $1 billion, let's say, not penny stocks, but these small startup companies can yield you more exponential growth than say what Berkshire can in a short period of time. So are you trying to just like almost rapidly increase your capital? And Berkshire is just not it, not the one for you, but Berkshire is, you know, say a long-term bet, and that's why you've got them in your retirement accounts.
Berkshire is a long-term bet. I'll read, and again, I don't like I don't watch the news. I read the annual letter every year, and one thing that Warren Buffett said that always stuck with me is the market could be irrational longer than you could be solvent. So I use the individual stocks that I go for to get the immediate growth, but I also keep plugging in, getting into Berkshire to have it run for the long term. I know it's going to average me 10, 12, 10, 12. I know the company itself fundamentals is way better than the market give it credit for. So that's why I just put it in retirement and just keep plugging away at it on the retirement side. And then I play other avenues on the active side because I'm not selling Berkshire. So that's one of the reasons why. But the market has been irrational. I don't think, and I've had Berkshire in my retirement accounts for 12, 15 years. The market is still irrational because it still doesn't give it the multiple of, it ain't giving it the multiple of a Palantir, and it outperforms Palantir. It ain't giving
Yeah.
most of these tech stocks, it's still not giving them the multiple. Will it ever give them the multiple that it rightfully deserve? Maybe not. But I know it's going to be a consistent gainer for me, and the company itself, forget the stock, the company itself will outperform most companies in the United States for years and years on end, and that's with Warren there or not. So that's why I keep it there, and I could just get the consistent gain for the retirement account, and then I could go for these rapidly moving and things that the market is more fell in love with. I can go with those more, and like I said, people look at Berkshire and they look at the sticker price of it. They look at the seeing that big number and they're like, oh God, I don't want to put all that money on one stock. You know what I mean? So that's why I play that. And then of course Berkshire is more, they look into the future. Me, I'm always say looking around the corner. They're looking into the future and making steady gains and things like that. Like if Apple was sitting there, And I remember on Apple when Apple was sitting there with a large cash hoard and they wasn't paying a dividend and they were just sitting there going to cash. I remember the stock going from like 700 and something dollars down to 500 down to like 368. But as soon as they announced that they was going to take out debt and then they was going to take out and they was going to pay a dividend, then the stock just went straight up to the right. That's what it is. Warren Buffett has been said he believed the company could do more with the dividend than giving it to the investors. So he's not going to give it. He's going to sit there in the cash hoard and he's going to wait with his elephant gun, waiting for the next deal to do an awesome deal. Most investors, especially in this microwave society we have today, they don't want to sit there and wait. They want the next big thing. So, but I do believe that Berkshire Hathaway is the most undervalued company on the market by far. By far, it ain't even close. By far.
Yeah, and I mean, let's say you look at it from like a perspective of like real estate. You know, you're buying, let's say you invest in Berkshire, you know they're undervalued. It's almost like the same way where you buy Berkshire Hathaway, you know they're undervalued. In hard times or in downturns in the market, we've seen these like overhyped tech stocks, you know, we've seen them run up, you know, 3, 4, 500%. But we've also seen these same stocks drop 80, 70%, like in a whim, like nothing. So, but you look at Berkshire in downturns, you might see them drop 10% or so. It's almost like if you make that same comparison to say like real estate, where if you buy good, if you buy something that's undervalued and it's, you know, under the market, like when you buy a real estate property and the market rents are under market. We saw it like in Florida where investors were having to ask for less rent because they bought wrong, you know? Instead of those investors like you and me who bought undervalued, who had rents under market, we can continue to raise rents. So we can continue to gain, we can continue to raise our income, raise the equity per se. And that's kind of, I think, the position Berkshire Hathaway is in from what you're explaining is, you know, they're still under market or undervalued in the market. And you know that what's to come is just growth. You know, sure, there might be a downturn, sure, it might take a small hit, but it's not going to be something drastic where, you know, they're sitting at an overvalued valuation and now they're going to just tank because there's hard times in the market. I don't think we'll see that with Berkshire because of like what you're explaining. They are undervalued.
I mean, just think on the forget the stock market, for instance. Just think on the economic side of it. The economic side of it. Just look at the portfolio that Berkshire has. If it's an economic downturn in the United States, if you look at the portfolio, tell me what changes. People still need insurance. The U.S. government and the oil companies still need to move oil. Financial companies still gonna lend. I mean, maybe at a slower rate, but they're still gonna lend. He's at the addiction side of the economy.
Right.
The business itself is still going to print. That's why Berkshire beats the S&P 500. I believe they had a run of like 20, 30 years straight of just beating the S&P 500 just on numbers and beats and stuff like that. But I look at it more when you relate it to the real estate industry. I look at more of the stock as value investors, you know, people that hold and rent versus flippers. You know, the stock market now is, you know, people just want to get in, flip, 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 flip. The thing that looks unattractive is just getting the slow mailbox money every month, just getting your check, getting your check. That's what Berkshire is. The person that's going to sit there and just get their check every month, they're going to outperform those flippers because, of course, you're going to get times like now where the flippers are out of position. They can find deals where they can get it at a cheap deal for the most part. Not, I mean, there's some, you know, high level flippers out there that can still, you know, find margin places, but for the majority of them, they can't find that margin to buy it and then flip it at a higher price, and they get caught offside. But it looks attractive because somebody can say, "Oh man, I just made $20,000 on this deal." But you know, we just collecting the mailbox money. You know, y'all money coming in, money coming in. You know, we add more properties and then money coming in. You know, now you fast forward it for when I started getting rentals to a guy talking about, oh, I did a flip in I did one flip and I made $20,000. And then of course they got that tax obligation to go with it. And then now I'll be like, okay, I didn't collect the $20,000 in rent every month, and I'm still just doing the same thing. You know, see what I'm saying? So those are the different aspects of it, and that's the difference I believe between Berkshire Hathaway and the other stocks on the stock market. It's it's that flipper versus just the long term mailbox money people, and then people just looking at what's more attractive. What's more attractive? Everybody want that money now, want that money now, want that money now. They don't want to wait till the first of the month to collect all the rent checks and then collect all the rent checks and then collect all the rent checks. It just looked more sexy to say, "Hey, yeah, I bought this house. I bought this house for 100. I sold it for 130." They ain't minus all the fees that they got to take out of there. Really, they bought it for 100, sold it for. I mean, they all in, and then the aftermarket value of it was 130, and then after everything got in the wash, they made like $15,000. But that's the sexy thing. So everybody want to do the sexy thing because everybody want that money instantly. So every time I tell people, "Oh, you're a real estate. Oh, you're a flipper." That's the first thing they ask. "Oh, you're a flipper?" And I'm like, "Oh no, I just buy a home." "Oh, okay." Like, oh, you ain't making no real money. You just,
Yeah, right.
you doing the slow thing. So that's really what I look
Yeah.
at Berkshire Hathaway as. So
With that said, guys, if you have any questions or comments, let us know down below. Let us know what you think about Berkshire Hathaway. We'd love to hear your opinion. Don't forget to send us content so we can react to. Like this video, please. It helps the channel. Share, subscribe. Check out our YouTube live every Saturday at 12 p.m. We'll see you guys.